right, so we're going to share with you more about tax terms and that you should know. Okay, so what is a dependent? Okay, and before we talk about that, let's bring this in closer so you can see what constitutes a dependent. A dependent is a person other than the taxpayer or spouse who entitles the taxpayer to claim a dependency exemption. Each dependency exemption decreased income subject to taxes by the exemption amount. Now, this amount was 2014, but it's gone up to, I believe, about $4,250. And to make sense of all that, let's run over to the website, the actually tax software website, where we're going to look at how all of that makes sense in determining, you know, what an exemption is, what is a dependence. It's somewhat one and the same as it relates to an exemption. However, when you're working with exemptions, you got more to work with than if you were doing an earned income credit when you're only limited to 3 children or 3 dependents, meaning that you can only, you know, it's not like you can go out and have 10 babies and expect to get an earned income credit for 10 babies. No, they cut that off a long time ago. So you don't, you know, you can't do that, but that's okay. There are other ways of getting your taxes down so you won't owe as much based on exemptions. 80292, and we're going to get in here, and I'm going to take you, I put in the wrong login, looks like. Let me do this again. Okay, let me pay attention to what I'm doing here. Okay, almost there, folks. Bear with me. And let's try this one more time. Okay, we're almost there. And what we're going to do is show you how all this ties into your understanding, you know, exemptions or dependents, your taxes, and how your dependents reduce your taxes. So if you owe taxes, how those dependents can put you in a position where you don't even owe the taxes at all. And let's show you that. So we're in the portal now, in the actual software that you would use to process your tax returns. And we're just at the main office manager. Okay, and we're not going to take you on a tour right now. What we're going to do, we're going to go into the system, and we're going to click Manage Returns, because we're going to find a return that's a head of household that has dependents, which all of head of household returns usually have dependents, some form of dependents. Okay, so we clicked on Marquita Armstrong. Here's her name right here, Marquita Armstrong. And she has 2 dependents, but 3 exemptions. Okay. So they work one and the same. They're actually the same, except exemptions is one thing and dependents are another. Okay. But they're all one and the same. Now, when she says she has 2 dependents, that means she has 2 children or 2 people that she's claiming as dependents. But in total, she has 3 exemptions. Okay, so let's go over here, and I just clicked on edit, and we're going into direct input. And if you watched another video, an earlier video, direct input is where we actually ready to rock and roll, ready to input. The interview mode is where you have to ask a series of questions in order to get to a certain point. And if you, once you learn the system, it's easier to go through the input mode than the interview mode. Okay, over here on your left-hand side are all the forms that that the IRS provides within this software that is used to file a return for any given reason. Now, your client will never, ever, most of your clients will never, ever use all of the forms, let alone just a handful. Now, Margaret, we're going to click on File Forms. These are forms that we actually use to start the process of filing her return. And these are the forms. Everybody, you know, has personal information that is inputted into the system. That's just automatic. Then if a person has dependents, of course, their dependents information is here. And then the 1040 page 1 and the 1040 page 2. And then there's additional information and so on and so forth. Okay, this person had also a W-2 income coming in. Okay, but what we're going to do, we're going to scroll down. We're going to scroll over and we're going to get her 1040 form that has already been processed pretty much. Now, it may have not been completed, but the process has started. So she's got a 1040A that was used. You know, the forms that you usually file with is 1040EZ, 1040A, and 1040. Those are generally the three forms that most people in the United States use, okay? So we're going to click on it, and we're going to show you what it looks like after it's completed or when it's pretty much processed. And it looks just like this. And some of you have seen this document, especially if you filed tax returns, you've seen this document. Well, if you scroll down, you'll see where it says exemptions right here. Let me get my little tool for you so I can point that out to you. There it is right there. These are exemptions. And what are the exemptions here? Well, the exemptions are people that you add to your W-4 that you fill out with an employer, or you can even add it to your returns of people that you want to add to reduce the taxes, the taxes taken out of your pay. Okay, that's one way of looking at it. In this case, there are 3 exemptions: the person who's filing, which is a client, and then this person had also 2 dependents. Okay, so these are all the exemptions. 2 dependents, including herself, which are all the exemptions. Okay, now the 2 dependents, there are other credits that you can get if you have dependents that meet a certain criteria in order to either reduce your taxes or give you a larger refund. Okay, now if we go to page 2 of this return, we're going to learn more about standard deductions and exemptions, okay? And this doesn't even have anything to do with the earned income credit. This is just standard deductions and exemptions. Now, standard deduction is a little bit different than an exemption. A standard deduction, if you look over here to your left-hand side, on every tax document or form that you process, this information will be here. Now, the top of these instructions don't apply unless you're checking 24A and 24B, but all other individuals, which is right here, this is how it applies. And most of your people it will apply to the same person. Now, and I want to make sure I'm making sense of this so you'll understand. We're talking about line 24, which is standard deductions. These deductions you get automatically, okay, depending on your filing status, okay? Now, these standard deductions go up pretty much every year, so you can get more of a credit, but that's good. So if your tax return is $14,000, this standard deduction could help reduce it. If it's $100,000, it could definitely help in a way. So all others, single or married filing separately, they get a standard deduction of $6,300, which would go here, right here. Okay. If you're married filing joint or qualifying widower, which is $12,000, that standard deduction will go here. It's a deduction. Okay. If you're head of household, which applies to this return, you get $9,300. Okay. So that's pretty cool, you know, because if you're making $24,000 and you take this and use and you get the standard deduction automatically, you got that coming off of the $24,000 plus any other amounts that may occur as the deductions. Okay, so you subtract line 24 from 22, which brought this down to $5,003, right? So, okay. So far, we're getting this amount, this $14,000 down. Now, this person and anyone else who has dependents or exemptions, you multiply those exemptions times $4,050. So it was 3. So that's 3 times $4,050, which would have added up to $12,150. Okay. You subtract 26 from 25, and the taxable amount of income is 0. So this person doesn't owe any taxes at all because of the standard deduction and also their exemptions, okay? Now, if you scroll down even further, and I don't see that this form was completed. Let me see if they completed this. I don't think they did. They didn't complete it yet. Okay, because they didn't add in, they didn't complete it to where they received the earned income credit to qualifying children, which they would have received the earned income credit. So the beauty about it is any taxes that they paid into okay, let me show you that. I'm sorry, I'm sliding all over the place here, you guys. Let me scroll this back up here. Okay, here we go. Any federal income taxes withheld would show up here. Okay. And the earned income credit would show up here as $42, but it's much more than that. Well, actually, it may only have been that if they didn't have children in this one. Let me go find one that actually has children, and we can find one so you can see the difference. Okay, so let's scroll up. Let's close out of here. And we're gonna let's go back to the client manager. We're gonna go to the manager return where all your clients will be. In your portal, this is the way it will look. Ayana, she's got a couple of dependents. Let's check her out. Okay, she got a refund back of $8,000, so she's got she's got some returns coming in. I'm extracting her documents from using another process. And let me slow down so you can see how I did this. This return has actually been processed, and she received $8,000 this year of back for her income. What I'm doing is I'm coming up here where it says view print. Let me scroll up because I can't get into this file anymore. It's already been processed. It's already been transmitted. Once it's transmitted and processed, that's it. It's gone to the IRS. You can't edit or anything. Now you can amend it. but you can't edit this return. So we're going to go here. And while this is coming up, we talked about security as it relates to your system. And one good thing about this system, it gives you some information, but it does not give you the total Social Security number, which is a really good thing. There are some screens that you can put on the cover of your computer screen that would help distort a person's vision when looking at your screen from an angle. Because usually when people are trying to look at your screen, especially if they're trying to sneak and look, they usually are looking at it from an angle. So those kind of things you need. But again, you want to make sure that you really are careful about you know, making sure that you safeguard your clients. All right, so these are all the documents that usually are standard that actually accompanies a return. So let's say your client needed a copy of their return, you would simply come here to give them their return, and these are all the documents that will follow in that return. And basically you would click on customer copy, and you can actually download it and email them the copy, or you can email them from this system. But what we're going to do, we're going to scroll down here, and as you can see, 1040, this is the type of document. This is the filing a document that we use, form 1040. Okay, and this is Ayana's, and she had 2 qualifying dependents, 1 son and 1 daughter. She had 3 exemptions, which she was one of those individuals. She grossed $32,000, but if you notice on her client manager, it said that she only grossed $14,000, and that's because of deductions, because she was self-employed. And because she was self-employed, we were able to itemize. As you can see, she filed a Schedule C, which is a profit and loss statement, business income or loss, which means profit and loss. She filed a Schedule C, which means she's in business, and she took a loss of $14,000. Okay, which brought her income down to $17,000, and it looks like she didn't have any deductions over here, and we'll get into that later. So her income was for $17,000. Okay, so let me try to scroll down. Okay, we're going on page 2, and you remember the last page I shown you was a different client. And they basically had the same situation, except Ayana here has a couple $1,000s more income than the other person did after she had some deductions. So her itemized deduction, or her standard deduction, one and the same, was $93,000. And if you look over here, you'll see how much a deduction she got based on her filing status. And then you subtract line 40 from 38, which left her $8,000 that could be taxable income if she didn't have any more deductions. Okay, and then she has for exemptions, you know, she had 3 exemptions. 3 times $4,050 came up to $12,150. I love that exemption deduction, because it really helps people get those taxes. If you didn't have those deductions, the standard deductions and the exemption to where you can reduce the amount of money you could owe, you would be owing taxes against $17,000 or $32,000. So it's just great to have that option. Okay, so she doesn't owe any taxes at all. Taxable income, as you can see, after you finish deducting line 42 from line 41, there she doesn't owe anything is zero. Okay, so we're going to come down. We're going to keep this simple. Okay, federal income tax withheld from Form W-2 or 1099. If you had any taxes that anybody, your contractor, if you're an independent contractor, like you work for Mary Kay or Avon or anyone that you, or a contractor, you get a 1099, you can request to have taxes taken out if you want to. Or, you know, it's automatically an obligation with employers as working employees for 40 hours a week. It's mandatory requirement that they have to take out, you know, taxes. So in her case, because she probably claimed exemptions, some people claim more exemptions than they should, she only had deducted out of her check $451. Now, some people have more than that. And if they do, and if they end up in a situation like this, where this turned out to be zero, where this line 43 turns out to be zero, any other credits below you get as a refund. So that's a beautiful thing. But when this 43 line is zero, turned out to be zero, everything else is pretty much a credit. Now, if it doesn't turn out to be zero, it means that you owe taxes. However, if you can have credits enough to cover those taxes and still get a little something back, okay? In this case, she got a first-time home buyer credit repayment. She had that for $500 that was deducted, which gave her a total of $500 total tax, okay? But that's okay because she still has $400 and $451 that she had gotten from her W-2, which could actually go in her pocket. She had an earned income credit because she had 2 children. And she had a child tax credit because, you know, somebody takes care of her kids while she's at work. And so she's getting all of this money back minus this $500, which came up to $7,523. So that's kind of how all that works, okay, just to make sense of it all. So let's go back to our presentation so you can see how this statement, how dependents and exemptions work, okay? Now, who can claim a dependent? First and foremost, a dependent is someone you support or your client support. And support is a key requirement. A client must have provided at least half of the person's total support for the year. Food, shelter, clothing, etc. If the child is an adult daughter, for example, and lived with you but provided at least half of her own support, you probably can't claim that person, you know, that dependent. But if you supported that child the majority of the year, you can claim that child. All right. Dependents are usually, but not always, a child or other relatives. Qualifying children and qualifying relatives have their own additional requirements, but all dependents must meet these requirements. Dependents can have their own tax returns and even be married, but they must not have filed a joint tax return for the year unless it's just to claim a refund. They must be a citizen of the United States, a U.S. national, or a resident alien. They must have a taxpayer identification number. That's usually a Social Security number. But if the child doesn't qualify for one, it can be an individual taxpayer identification number, which is an ITIN, or an adoption taxpayer number. Okay. Now, rules for claiming children are as follows. And let me reduce my little page down here so we can see what we're doing here. Okay. Right. Okay, we're okay. I hope you guys can see this. Let me just bring it up just a little bit. And then I turn my page. I think I did. Okay, rules for claiming children. When you're claiming a dependent who is a child, there are further requirements. The child has to live, uh, uh, have lived with you for at least half of the year. The child has to be related to you as a son, daughter, stepchild, foster child, brother, sister, stepbrother, stepsister, or a descendant of any of those. Okay, so let me repeat this again. When claiming someone, they have to be a son, a daughter, a stepchild, foster child, brother, sister, stepbrother, stepsister, or a descendant of any of those. The child must be 18 or younger at the end of the year or under 24 if a student. So you can claim students, they're in full-time college or they're in college, and well, in this case, it's full-time at least 5 months of the year, okay, or 5 months of the year, okay? And to be a student, the child must have attended school full-time during at least 5 months of the year. The 5 months don't have to be in a row, which is always a good thing. The child must be younger than you or your spouse if married filing jointly, unless the child is disabled, okay? So, you know, this, you can always come back to this video if you still need, you know, more instruction, or also you can go into your guide and read more about the terms and so on and so forth. But it's just good to know these basics, because that way you know what to expect. And as you move forward, you'll see it really just comes real easy because everything is repetitious. For a parent or other relative, there are different additional requirements. The person cannot have a gross yearly income of over $4,050, okay? The person that you're claiming can't be a qualifying child dependent of you or another person. That means you can't claim the person if someone else could, okay? The person must either be related to you or must have lived with you all year as a member of your household, okay? One question that some folks ask is, can I claim my girlfriend or my boyfriend as a dependent on my taxes? And the IRS rules for a dependency exemptions are applicable only to qualifying children, qualifying relatives. So if your boyfriend or girlfriend can't pass all of the following qualifying relative test questions, you will not be able to use your boyfriend and girlfriend on your tax returns, unless you're, of course, married, you get married. How long can you claim your child on your taxes? To meet the qualifying child test, your child must be younger than you and either younger than 19 years of age or a student up to 24 years of age. Okay, can I claim myself as a dependent if my parents claim me? The parents will claim all educational tax credits that qualify. If the student will be filing a tax return and the parents qualify to claim the student as a dependent, then the student must select the option for I can be claimed on someone else's return on or the student's tax returns. It's either or. Okay, you know, you have to make the call, you know, whether or not it's more advantageous for you to claim the child. And a lot of reasons why is you can get possibly a little earned income credit and other tax credits because you're taking care of the child. So that's something that you have to look at. What do I do if someone claimed me as a dependent? That's usually identity theft in most cases. And so what you want to do, and it's fraudulent. No one is supposed to claim you without your permission, or your children without your consent, okay? And they're cracking down now. So they're very, very strict about how they do, how they look at the dependents, because it's really not good in terms of how individuals out here are actually stealing, you know, folks' identities, children's identities for those purposes, and that's to get a large income tax return.